Okay, welcome. First of all, hi Vicky, how are you? Can everyone hear me okay? And can everyone see my screen that says live trading with Steve? Sound and vision good. Excellent. Okay. All right. So, without further ado, let's get this party started. Some geezer. That's a young guy. If that was really me in that picture, you'd see my gray hair. That's a young guy. All right. So a little bit. This is going to be a live trading webinar, and just get the formalities out of the way here. Disclaimer: yada yada yada. Highly risky. Don't do it. Don't listen to me. Don't listen to anybody, etc., etc. You've been warned. Quickly about me: 27 years experience, individual retail trader, managed accounts, trade my own account, also do private coaching, blah, 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 blah. For those of you that don't know or have not, excuse me, been to any of my webinars so far, I highly recommend you go back and review them. But the way that I like to do my webinars is kind of in a lecture sort of format. I figure since universities teach people that way, then they've been educating people a lot longer than I have. I might as well follow that same type of approach. So for me, you're not going to come in here and you're not going to learn one or two things that are going to, make you a profitable trader or anything like that. It's more of a cumulative effect where, you kind of have to keep coming back and getting more education. All right, so let me get right down to the charts today. Oh, 1 second, sorry. Okay, so let me just back up a little bit here. Today I turned all my charts on, and I knew today I was doing this webinar, and I looked at, excuse me, I also apologize if I cough or sneeze or anything. I'm still getting over a bit of a cold. I looked at all of my charts this morning, and the first thing I looked at was the Aussie dollar. And I went, great. Going to be one of those days. And then I looked at the euro at the same time. And I went, okay, this is not fun. And then I looked at the GBP. And I went, okay, this is really going to be an interesting day to look for some live trades. Okay. And so because we didn't start this morning right off the bat with some trades, my initial reaction coming into today was to potentially, with the GBP being strong, the euro being very weak, and with the Aussie dollar being neutral, I knew today was going to be kind of a really difficult day. And if you go and watch my video called Context is King, I'm a very big believer in just basically taking each day individually and applying what is happening during the course of that day to help you gain an edge or a probability or an advantage over each and every trade. So looking at today, I saw a stronger euro during the Asian London session. I saw the Aussie dollar basically spike down, spike up, spike down, spike up, and be neutral. And then I saw the euro during the Asian London session basically chop around and make a spike down and spike back up. So the only thing that looked like any type of looked interesting this morning was potentially the GBP, because the GBP went pretty neutral during all of Asia and then had a spike down and then totally reversed that spike coming into the New York session. All right. So my game plan was initially to potentially look for a short on the GBP and then to looking at the Aussie dollar. My game plan was to sell any rogue candles around this area. I was looking for shorts, okay, and then my game plan on the euro was to I was looking around initially selling any if the euro got up to this high initially. So this was really I'll answer questions as we move along, Boyke. Usually no, though 90% of the time no, Boyke. This is what I was looking at during the morning. So the GBP, let's talk about that, because that was the trade that I had the closest probability on. And then the GBP did a little bit of a spike up higher, and this trade happened. Now this trade happened, and I was busy in my room with some of my students, and I missed the trade. To be honest with you, I would have taken this trade on the GBP, and my initial target, we're going to talk about the actual trades I did, but just it's important you follow the thought process. My initial target on my GBP was to come down into this area right here, and I missed the trade, and the trade started working really, really well, and I was like, damn it. And then it started to back up again, and the day progressed. So that was the very first trade that I missed. But I'll talk about the actual trades I took in a second, and I'm actually in a trade right now still. So around this time, the Aussie dollar was chopping around in its little fun land, and it was doing nothing. And the GBP, the euro at this time was took out this low here. Now, for those of you that don't know what type of trader I am, I'm a liquidity trader, which means I look for areas of high liquidity and low liquidity in the market, and then I trade in between those levels of high liquidity and low liquidity. And that's basically what I do. A lot of people think I'm a stop hunter. A lot of people think that they have a lot of misconceptions about what liquidity runs are and things like that. But basically, my style of trading is to the markets move from an area of low liquidity to high liquidity to low liquidity to high liquidity. Markets exist for one reason and one reason only, and that is to find the most amount of orders. Okay? That is what the markets do. Okay, that is their whole sole purpose of being, is to find the most amount of orders that they can find. Okay, if any exist. Okay. Ahmed asks, is the GBP movement today due to liquidity run? I don't think so, Ahmed. I don't think that the GBP movement was so much a liquidity run. Okay, there's two things I want to differentiate to people right now. There is a big difference between a liquidity run and the market moving from an area of low liquidity to high liquidity. Let me repeat that. There is a big difference between a liquidity run and the market naturally moving between low liquidity and high liquidity. Okay, that's an important thing I just said. Okay, because there's a lot of stuff floating around the internet about liquidity runs and stop hunts, and it's my opinion, it's nonsense. People don't understand it. And Boyke brings up a really good question here. Boyke asks, is liquidity equal to support and resistance? And that's an excellent segue, Boyke, an excellent segue into Ahmed's question, because and to what I just said, because when the market moves from one area of liquidity to high to lack of liquidity, or to low liquidity, from high liquidity to low liquidity, high liquidity, low liquidity, when a market is moving, sometimes it's natural supply and demand. Okay? As a matter of fact, a lot of the time, it's natural supply and demand. Okay? So what is a liquidity run? Okay? A liquidity run is when a specific hedge fund, or sometimes it's a couple of them combined together, and sometimes it's like a bunch of them combined together, and just large traders that are hunting for a specific level because there is a mathematical advantage to do it. But that doesn't happen that often. Everybody thinks it's happening all the time. Like, I get emails and questions all the time from people, and they're always saying to me that they're under this impression that these liquidity runs happen all the time. And they just don't. Okay? They happen rarely. Maybe on all the pairs, they might happen 3 times in one day, and they might happen once in one day, and they might not even happen at all in other days. But if you consider how much the market moves, then you'd be really, you would think that the liquidity runs people think liquidity runs happen on like 90% of the time. They're not. They're happening maybe 5% of the time, if that, maybe 3% of the time. So I really want you guys to please understand there is a difference between a market moving from one area of liquidity to moving to another area of liquidity. And so for today, I do think there was a couple of hunts that went on today. But judging by the market behavior, there was too much volatility in today to do anything too safely. So I do think there were a couple of situations today where it happened. So there is also a big difference between support and resistance and liquidity. Okay? Support and resistance are just natural areas of, usually support and resistance are natural areas of sellers or buyers. Okay? natural areas of where there is accumulation of sellers or buyers. Okay, where a liquidity run is where liquidity pools is a different thing, because once again markets move from high liquidity to low liquidity to high liquidity. All right. So Boyke asked, does this also apply to stocks and futures? Yes, absolutely. As a matter of fact, more so in stocks, because markets can be manipulated much more in lower liquid markets. So stock markets are notorious for liquidity hunting, and I would say that more manipulation occurs in stocks because they're easier to push around. Futures, yeah, of course they apply in futures as well too. It's a really weird world these days because the world has changed in so many ways. The futures markets they're in a bit of an in-between world, but yes, they do apply to that, Boyke. Okay, is a liquidity run where everybody is long with their stops below the market, so they're in effect supply and demand. They are in effect supply on the market. Not exactly. Not exactly. So anyway, let me just continue here. But please, if this is being recorded, go back and listen to what I said, okay? Because I think a lot of people out there are really misinformed about that. At least that's what I'm seeing on forums and from the questions that I get. Okay, you have to differentiate between what a liquidity run is and natural market orders that are just occurring. Okay, regular supply and demand. All right. Okay, so let's move forward. Let's talk about today's trades. So as we went into today, I thought about, excuse me, I thought about this move down here, and this to me looked like a small liquidity hunt down here. To be honest with you, I thought this was a small liquidity hunt, and then I saw this big price reaction, and then I thought to myself, okay, well, I can now potentially use this area here on the euro as a trade, but I really don't want to be diddling in the middle today on anything. I really want to wait for extremes today. So, excuse me. So at this point in time, the Aussie dollar was kind of still screwing around, and the GBP had backed up, didn't get to that target that short that I missed had hit. And so I just kept watching all day. By the way, I'm going to show you real trades here, guys, okay? So we're going to get to that in a second, but I just want to give you the actual build-up of this. And then finally, let me just talk about the Aussie dollar. Then the Aussie dollar finally, let me just move here, put in a little move here, and eventually did this move, and bam, came up into this level up here. Now, as soon as we got to this level, I loved it. Now, I'm going to actually show you my trades here. So here we have my trades for the day. I took 4 trades today. These are real-time trades at 1446, 1447, 1454. My first trade was I loved the Aussie dollar so much at this level that I decided to do some really nice size because I could use a 5-pip stop on this sucker, and I loved it. And so I got very aggressive on the Aussie dollar, and I actually took. I like to scale in when I like a trade, and I took a short on two shorts, actually three shorts on the Aussie dollar, and one short on the euro. And here were my prices. We will talk about those in a second. And these are the ones that are closed. I still have one open right now. And this was my exit time on the trades. And this is my profit on the trades. This is my exit price. And here's my profit on the trades that I took. Okay? So let's talk about those trades. These were taken in real time today. So let me just close this. Okay, so as the Aussie dollar came up into this area, okay, this area, if you were doing a liquidity hunt right here, we should have gone through this area. But I love this area so much because of the price behavior that was happening. My first two trades were literally right at the high, if I'm not mistaken. My price was 104,309. So 104,309. My price right here. So I almost got it. I got it right to the tick, including my spreads. So I mean, I picked off the top perfectly, and the trade did exactly what I wanted it to do right away. I got immediate rejection. Now, you guys have heard me say, go read the book, Reminiscence of a Stock Operator, right? How many times have I told people that? Go read that book. Everybody reads that book. They think it's a story. I think it's a story about Jesse Livermore. But that book has so much valuable information in it. And, excuse me, one of the things that you hear floating around in this world all the time is hold on to your winners and let your winners run and cut your losses fast, right? Well, one of the things that I like to do is my style of trading is to get instant gratification. I hate taking heat on trades. My personality sucks bad at taking heat. I can't take heat. I hate trading that takes heat. So I don't like to go into loss right away. And when we trade the Forex market, we're automatically paying a pip spread, and we start off at a loss. It's one of the things I hate the most about the Forex markets is every trade starts off at a loss. And I know in the stock market and the futures market there's a spread as well too, but they're tighter usually most of the time, right? Taking heat means the trade goes into a losing position first. So whenever I get a trade that goes into a winning position, usually I will love that trade and I will hold on to that trade for as long as I possibly can. Now, judging by today's price action, let's take a look at the Aussie's price action today, okay? If you take a look, yes, I'm a very impatient person, Boyke. To be very honest with you, I am impatient. If we take a look at today's price action on the Aussie dollar, believe me, I have a lot of flaws. As a trader, I have a lot of flaws I have to overcome each and every day. The Aussie dollar, basically up until this point in time, moved down 25 pips, moved up 40 pips, moved down 36 pips, moved up 24 pips, moved down 23 pips, moved up 33 pips. Okay, so when this trade happened, this freaking thing was all over the map. Okay? It was all over the map. So usually I would love to, when a trade goes in my direction right away, I usually will hold on to that trade for a longer period of time. So in this particular case, I couldn't. Okay, I couldn't hold on to this trade for a long time. I had to go into a make it, take it environment because the context of today is to take your profits because the market is so volatile and it's hunting liquidity all over the place. So I decided that on this particular trade that I was going to just size the trade up, take a lot more size, and I don't always, Wiki, I scale up sometimes, I scale down. I was going to size the trade up, and I was going to take a lot more size because I have to, not good, Luca. I'm going to have to take my profits fast on this trade. All right, so at the same time that this trade happened, I looked over at the euro, and I saw the euro at this point in time was much weaker than the Aussie dollar. All right? So I want to put as many advantages in my corner as I can. Okay? And so the Aussie dollar is much stronger than the euro right now, but I also knew that there was a lot of back and forth action, so I decided to split my trades up and take the euro short as well too here. Okay, so I ended up at the same time I took the Aussie dollar short. You can see here I took the euro short as well at 12.775 even. Okay, 12.75 even. So I got the euro short right here. Oh, right here. Okay. So at this point in time, I know that I'll answer questions in a bit. I know that I got to take my profits fast, right? Now, at this point in time, I really, 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 really liked this level on the euro, but I've got to take profits fast, so I quickly calculated my risk to return on the euro, and I figured that if I got down to here, I'd be happy with the trade because this was about a 2-to-1 risk on this particular trade. Okay. I never follow my intuition, Ahmed. That's just silly. I'm not a gambler. I am a trader. I have a very specific trading plan. Okay, so gold just made a pop. Sorry, guys. I'm just going to keep my eyes open here because gold just popped, and I'm watching gold today. We might actually get a live trade today, guys. Let's see if we can get a live trade going today. Okay, I'm watching gold really closely. Now, I was watching gold up at this level earlier, and something must have just happened because we're getting a nice rogue candle on gold. And my trading plan today is to fade any rogue candles. Let's see if we can get a live trade here, maybe on gold. Nice. Nice, nice, nice. Okay. Watching gold really closely here. We might get a live trade on gold. Maybe, baby. Just hang tight, guys. We might get a live trade here on gold. Ooh, I'm so tempted just to fade right now. Damn. I'm just so tempted just to fade this right now. I think I missed it, though. I think the trade on gold right now was to sell right at the close of that candle. Right at the close of this candle was to sell. I'm about $1 underwater right now. I'm not going to chase it. I think that would have been a better trade. Maybe now. Hold on. Maybe I'll just do it small because I'm doing a live seminar with you guys, okay? I'm going to just do it small just for the fun of it. Okay? I like to trade a lot. Okay, so I'm going to keep an eye on gold while we're trading. Cool. We get a live trade, actual live trade. Yay! All right, so here we go. Okay. So anyways, blah, blah, blah. Where was I? The euro. Oh, yeah. So the euro, then after I took my trade, the euro, I really liked this area on the euro because I felt that enough liquidity was taken out up here, and now we had a lot of liquidity building up down at these levels, and the euro trade went right into profits for me, and bam, within 5, 10, 15, 20, 25 minutes, 35 minutes, the euro hit my 2-to-1, and as you can see here, I exited the euro right at that time for a nice little profit. Now, I want to talk about this because I want to talk about how you can use what other pairs are doing to help you make better decisions. So let's talk about this candle by candle, okay? I'm not going to give this trade too much on this. I got it. Now I got to exit it. Damn it. One second. I'm not going to give it too much room. I just got to cover account numbers here, guys, so give me a second. Oh, sorry, 1 second. Hold on a second. These are my client's accounts, so I have to just be careful. Be careful with account numbers. Okay, so blah, blah, blah. I'm going to give that a couple ticks up there. Gold is typically a very volatile puppy, so I'm not going to give it much room at all. If it doesn't reject right away, I'm going to get out of Dodge right away. Ah, you bugger. Okay, gone. All right, so let's continue here. All right. Let's go trade by trade here. Gold may give me another trade here in a second. I might take it again. Let's see here. So here we are here on this one right here. All right. So now we're in this trade on the euro, and I'll get to the questions in a bit. Let's watch something here on gold. go here. I'm still liking the gold short. I'm still liking it. I'm still liking it. If it comes back down underneath this level, I'm going to retake it again. I'm going to just stay small on it. Okay. I'm going to take it again, one more shot here, and that's it. Okay. I don't know. I like it. I like it. I like it a lot. I think it's just going to be very volatile. Okay, so let's continue. Ah, you bugger. Okay, now this level is holding up as support, as resistance right now. Am I going to have to exit you again? Yep, I am. Welcome to Gold Trading 101. Again, you son of a bugger. Okay, bye. Alright, we'll get it again, don't worry. Alright, so let's talk about this trade right here. And as this trade was behaving like this, take a look at the Aussie dollar. The Aussie dollar was coming back up to retest this level. So I ended up getting instant reaction on this trade, and then I ended up having this candle come back down. So when this candle here is happening, you take a look here at the euro. The euro decides to go into this small area right here, which it's holding all of this liquidity. It hunted all this high liquidity right here. The market went up. It couldn't take out, so now it's going to go from an area of higher liquidity to lower liquidity. Okay, and so now the euro now gives me 5 minutes of happiness. The Aussie dollar ends up giving me some gratification, and then here's what happened on the Aussie dollar. When this white candle came in, right? When this white candle came in at this level right here, I was a little bit concerned about my trade, and so I decided that look at gold again, you bugger. I'm going to get gold, trust me. We're going to get it today. It's coming back down. It's 1723.50 is really behaving really kind of funny here. If we come back underneath 1723.50, it looks like we're going to just drop. It's a big level. So I'm probably being a bit aggressive on this because I'm taking small size during Mercury retrograde. What's Mercury retrograde? Okay, I'm going to try it one more time. I'm probably, watch this level here. Based upon what's happening right now, one of two things should happen right now. Either a big massive black candle, which will bring us right back down to this level right here, or it's going to completely screw around on me right now for the next half an hour or an hour and just screw around in this area before dropping down here, or which it looks like it probably will, because there's a lot going on 1723.50 right now. And so one of those two things, either immediate rejection at this level, or screw around, and then drift down for the rest of the New York session. Okay, I'm hoping that I get an immediate black candle. But I think what will probably end up happening right now is, based upon the liquidity that's occurring at this level, it looks to me more like screw around, come down, come back up, come down, come back up, come down, come back up. That's what it looks like to me. So around this level, I'm going to watch very, 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 very closely, because if we come down through this level right now, then we'll definitely go all the way down to retest liquidity down here. So I'm really kind of hoping that we don't screw around and that we actually come down through that level. And I was probably very, very aggressive on my first entry and my second entry, but I only took small size, so I'm not really too concerned about it. I took 1/4 of my normal size on this. All right, so let's just see what happens here. I just have a feeling, and if we hang up with the webinar, like I said, one of two things that we're watching for on gold right now is that I want to see one of three things will happen. Either we're going to mess around in here, black candle, white candle, black candle, white candle, black candle, white candle, and then slowly grind our way down to 21, okay? Or have an immediate reaction, because there's a lot of latent orders building up in here, and go immediately to 21. And so I'm going to watch it very, very carefully at 21. Now, if we can get back underneath 21 and go through 21, then there are so many orders in this area, excuse me, that we should do 13, right? But judging by how the market's handling 1723, I really think we're probably going to just mess around and just do black, white, black, white, black, white, black, white, black, white, black, white, and then hopefully just drift down to 1721 later on in the day. So let me just move on here. So now, as we take a look at this trade here, then it just fell off a cliff, and this is where I exited my 2 Aussie dollar trades. Okay. All right. And so now I decided that I'm going to hold. You can see here I still have a position on the Aussie dollar. I decided that I was going to hold the Aussie dollar because of the current price action that today's happening. All of this back and forth indecision, all of this context that we're going through right now, it could very easily, before the end of the New York close, end up all the way back down here without too much problem whatsoever. Okay? So I decided to close most of my position at 2-to-1, but because we're make it take it environment, I decided to hold a runner to see if we could get down to these lows, because once again the moves are fairly substantial today during Asia and London, and so I'm not expecting it to happen until much later on in the day. Okay? Questions. All right. So let me go back and check questions out. Okay. Mercury goes in retro. Oh, we have a astro trader in the room. Gemma Gioiardi is an astro trader. It's funny because I know a good friend of mine. He's an astro trader, and he swears by his astral charts. And you know what? I think that some of the stuff, a lot of people scoff at astro trading, where people will say that, how can the planets have an effect on trader behavior? Well, you know what? I have a friend that makes a lot of money, and he's an astro trader too, and he follows the moon and the sun and all the planets as well too. He seems to be doing okay with it. Personally, just not my cup of tea, but hey, if you can make it work, then all the power to you. Questions. Gemma asks, why did you sell? You mean the gold trade? Why did I sell the gold trade? Is that what the question is, Gemma? Ahmed asks, Steve, Aussie US dollar has been channeling for days. Is that not a high probability trade to enter? Okay. I wouldn't say that the Aussie dollar has been channeling all day or channeling a lot. The Aussie dollar really hasn't been channeling that much. Just really for the last couple of days, it's been kind of screwing around in here. It kind of spiked up and then spiked up. This was a big spike after the, this was a big spike after their RBC interest rate announcement. Then it made another leg higher, and now it's kind of screwing around. But yeah, Don Christie says there are some awfully good astro traders and sunspot traders. Yeah, there's another guy, like I said, a friend of mine trades sunspots as well too, and apparently when there's solar flares, it causes traders to have behave more emotionally. And you know what? I think there's some truth to that. You know what I mean? And Astroniki and Fibonacci. That's funny. My version of a lot of stuff is that, and believe me, in 27 years, there's nothing that I haven't seen, right, guys? I've seen pretty much everything in 27 years. In my version of 27 years, I've seen a lot, right? So I think that there are lots of pieces of the puzzle out there, all right? Trading is a big puzzle. And, one of the things I tell my students is that our job, basically as traders, is to figure out the puzzle, all right? Now, my version of of trading is to put the pieces of the puzzle together each day. So I think that you have to have some type of way of doing that in order to make you a good trader, right? You have to figure out the puzzle every day. That's why I'm a strong believer in context is king, all right? So, whatever gets you to that point of putting the puzzle together is all good, I don't care what you use. I don't care if you use Fibonacci. I don't care if Astro Trading helps you do it. I don't care if moving averages help you do it. I don't care if indicators do it. The job of a trader is a detective. That's our job. We have to figure out, how that person committed that crime every day. And we have to figure out who that person is, how that person committed that crime, and then, then we have to figure out other things. So all these things, Astro Trading, Murray Math, GAN, all this stuff, it's all just tools to help you figure out the puzzle. Now, at the end of the day, I don't use any of that crap, and I respectfully call it crap. Okay? I respectfully call it crap because I think you can find all that information out just by looking at a simple chart if you know what you're looking for. Okay? Because all that stuff is basically all based upon order fill anyways, right? Okay, gotta go. Vicky's giving me heck here. But, so as far as this gold trade goes, guys, I'm looking for it to come down to this area. When it comes down to this area, I want to watch how the market handles this area again. If it comes through this area again, I'm going to hold the trade for a much longer thing. I don't think it's going to do it quickly. I think it's probably going to take the whole New York session. If it does it at all, I think black candle, white candle, black candle, white candle, slowly grind its way back down to test the 1721 area, and then I'm going to watch it really closely here, and depending on how it behaves around this area, I'm either going to exit, move my stop to break even, or potentially move down to here. As far as my Aussie dollar trade that I still have open is concerned, I believe that I'm actually going to potentially hold this trade much longer, but I'm going to watch the Aussie dollar trade around this area. Thank you very much, people. Once again, if you want to contact me, here's all my information. Email me, call me, Skype me. I'll be back. I think I'm back in 2 weeks. Okay? Bye for now. Thank you all for coming.